Good day, students. Welcome to lesson 70. In this lesson, I will mark exercise 4K and only exercise 4K, but because it's quite a long exercise. Okay, so let's start. What they said, the trial balance appeared in the books of Everyday Dance Club on the 30th of November. Okay, and then they say you must enter the transactions in the cash book, and then they give you the additional columns that you have to open. And then they say close off the cash book at the end of the month, post to the general ledger, show the adjustments in the ledger accounts, the adjustments, draw up the trading account for the canteen, draw up the statement of income and expenditure. They say expenses, but we say expenditure, and then draw up the balance sheet. Okay, so let's start with the transactions or the entries in the cash book. Okay, what do they give you? They give you the source document for those transactions, the cash sales, total cash sales from the cash register roll. They give you duplicates of receipts issued, duplicates of bank deposit slips, and then the check counterfoils. Okay, so let's start with the debit side of the cash book. That was the receipt side. Okay, so let's start with the entries in the cash book. Okay, we start on the debit side on the receipts. Under the receipts, we start with the balance. That is, we got that from the pre-adjustment trial balance 234 rand. Okay, and then on the 5th we have sales. We got that amount from the cash register roll total or cash register rolls on the 5th. 1472, and we write that amount in the analysis column and also in the canteen sales column. Not in the bank because we haven't, if we look at the deposit slips, you'll see that there was another deposit also on the 5th. Okay, so the other deposit on the 5th was from Expenditure for 800 Rand. It was 350 membership fees and 450 entrance fees. And then that is the amount for 800 in the analysis column. And if we add those two amounts, 1472, we get that amount of the deposit slip of 2272. We have deposited that money on the 5th. Okay. And then on the 6th, we have received money from Shabangu, also 800 Rand. And that amount was deposited in the bank on the same day, on the 6th. So that is why we write the 800 in the bank column. In the bank column, we always write the deposits. If we've deposited the amount, in other words, if we work with source documents, the amounts that we enter in the bank is what we will get from the source documents from the bank deposit slips. That means we've deposited that money. Okay. So that is the 800 is deposited in the bank, and then it was for 350 Rand membership fees and 450 entrance fees. Okay, and that gives you an amount of 800 Rand. Okay, and then on the 7th, we received 100,000 from the estate of D. Davy. It was a legacy. Remember, we said in the past that when you hear the word it was a legacy, then you know you're going to create or you have to open a fund for that legacy. So we're going to credit that fund account. So we in the sundry accounts column, you write 100,000, and the account that you're going to open is the Fund D. Davy. Okay, and then sales also on the 7th, 940 in the bank and in the sales column, canteen sales column, 940. So in the analysis column, we have 940, and then in the bank. Okay, and then in the bank, 100,940 Rand. Okay, and then on the 10th, we have sales, 4850. In the analysis column, that amount was also deposited, so 4850 in the bank column and also in the canteen sales column. We have sales on the 29th, 2541 in the analysis column and also in the canteen sales column, and and that amount was only deposited on the next day, on the 30th, because if you look at the deposit slips, you will see there was a deposit on the 30th of 5541. That is that 2451, plus there was also a donation received from Gilbey's for 3,000 Rand on the 30th. Okay, so we write Gilbey's, and then in the sundry accounts column, we write 3,000. In the details column, donations, and then in the bank column, we write 5541. That is the total of the 3,000 plus the 2541. Okay, so let's do the payments from the check counterfoils. Okay, on the second, cash for petty cash impressed amount of 300. So it's cash, and then in the sundry accounts column, petty cash, and in that amount column 300, and in the bank 300. On the 5th, we bought stationery from CNB, 25 Rand in the bank column, and in the stationery column 25 Rand. On the 7th, to the municipality for water and electricity 367, municipality bank column 367, sundry accounts column 367, and in the details water and electricity. On the 8th, to Yes Bank for an investment of the legacy from Davies, and then the conditions, they just say what should happen with the interest. Okay, so let's do the payment first for that legacy. So it's Yes Bank, 40,000 in the bank column, and then we are going to open an investment account for that money that we've invested. So it's investment D Davies, 40,000 in the sundry accounts column. Okay. And then on the 11th, wages, cash, 1,000 in the bank, 1,000 in the wages column. On the 13th, petrol, 187 in the bank column, and in the sundry accounts column, fuel, 187. And then for stock to plate traders for canteen stock, 3235. So it is 3235 in the purchases canteen column and in the bank column. And then on the 17th, we bought stationery from BB Stationers, 325 in the bank column and in the stationery column. And then on the 26th, to Sunshine Shop in part payment of the account 1120. So we write in the bank column 1120, and then in the sundry accounts column 1120, and the account is creditors. Okay, remember we said that when we have work with like clubs, we're not going to open because we don't have a lot of creditors. So we enter all those transactions for creditors. We just open one account, and that is for creditors, and we enter all those transactions, all the transactions regarding creditors, we enter in that one account, the creditors account. Okay, so that was 1120. And then on the 27th, we drew cash for wages, 1,500. So in its cash, 1,500 in the bank column and 1,500 in the wages column. Okay, so the next step is to balance that cash book, and we add the credit side, add the debit side, the same as an account, and the difference is on the credit side, on the payment side, the difference is 66578, and that is the balance carried down on the credit side. Okay, and that will be the balance brought down on the debit side on the 1st of January X2. Okay, and then the next step is just to add up the columns. So we start with on the receipt side, on the debit side, with membership fees, the total is 700, entrance fees, the total 900, canteen sales 9803, and the sundry accounts is 103235. And just to check that our amounts are correct, we add the sundry accounts plus canteen sales plus entrance fees plus membership fees, and that should give you the same amount as the total in the bank column of 114,637. If you look at the payment side, the wages column is 2,500, purchases canteen is 3235, stationery is 350, and the sundry accounts total is 108,552. Okay, you must just remember when you enter the balance carried down in the bank column, that you also enter that amount in the sundry accounts column. The balance carried down on the payment side must be entered in the bank and in the sundry accounts column. Okay, so now you've got your totals. So now you can post to your general ledger. Okay, so the next step is here to open your ledger accounts. And the first thing that you do, you work from your trial balance that's given to you, the trial balance on the 30th of November. So you're going to open all your balance sheet accounts with the balances that are given in the trial balance. Start with accumulated fund, all those accounts you're going to open. And then in the nominal account, okay, and then you're going to start with the nominal account section and just open all your accounts with those totals that are given. All right. Just remember, if you do your ledger, that you will need to leave a space open after that. The last account here is loan show bank. Okay. Just remember to leave a space open for extra accounts that you're going to have to open extra accounts like accrued expenses, accrued income, and maybe other balance sheet accounts. So just leave a space open for those accounts before you carry on with your nominal accounts. Okay, so then you've opened all your ledger accounts with the balances that were given in the trial balance. Okay, the next step is to post from your cash book to your general ledger accounts. Okay, so let's start with the receipts or the debit side of the cash book. Okay, we don't open a bank account, as I've already said to you. The bank account is like included in the cash book. So we start with the first column, membership fees, 700. So we've debited bank, so we're going to credit membership fees. On the credit side of membership fees, you will have bank, 700, and the date will be the 31st because it's a total that you're posting. All right. Entrance fees on the credit side, you will have 900, and the contra account will be bank. All right. Let me just see. Did we have an entrance? No, we did not have an entrance fee and in the nominal account section. So that is the first extra nominal account that you will have to open is for entrance fee. So you won't have a total in that account. You will just have an amount on the credit side, or you will enter on the credit side bank, the 31st of December, and you will the entry will be bank, 900 Rand. Okay. Canteen sales is the next one. Yes, there was a canteen sales. It was number N1. So that had a total. So you're just going to write on the credit side, bank, 9803. Okay, that was the total. And then you're going to post from your sundry accounts. There's no fund account for Davy yet. So you're going to need to open that in the balance sheet section, B10, you're going to open that account for Fund D Davy. And on the credit side, there's no total or balance in that because that account was not in the pre-adjustment trial balance. Sorry, not the pre-adjustment. But on the trial balance on the 30th of November, it was not in that trial balance. So you will open the fund account, and on the credit side, you will enter bank 100,000. Okay. And then we get to donations. There was no donations account under the nominal account section. So you have to open a donations account, and on the credit side, you will just enter bank. Okay, so let's start with the payment side. The wages column, the total is 2,500. So the double entries, you've credited bank, so you're going to debit wages. And there was no account for wages in the nominal section. So you will have to open the wages account, and then on the debit side, you will write bank 2,500. Okay. And then purchases canteen, yes, there was a nominal account that you've already opened, number N2. So you have a total in that account of 14,253. And then also on the debit side of that account, you will write bank 3,235. 5, and that will be on the 31st because it's a total that you post. Stationery, there was no stationery account. So you'll have to open a stationery account, and then on the debit side, you will just write bank, 31st, and there were 350 is that total. All right. And then we post from the sundry accounts column, there was no petty cash account. So you're going to open a petty cash account in the balance sheet section, open petty cash, and on the debit side, you'll just write bank, 300, and the day is the 2nd. It's not a total that you post, so you can enter that exact date. It was on the 2nd. Okay. And then the next one is water and electricity. Yes, there was an account. So we've already opened that with a total of 1, 2, 3, 4 on the debit side. And you will just add this one, and you will write on the debit side of water and electricity bank 367. And then the investment D Davies, you need to open that in the balance sheet section and account for investment D Davies. And on the debit side, you will write bank 40,000. And then it's fuel. So we don't have a fuel account opened yet. So under the nominal account section, open fuel. And then on the debit side, you will have bank 187. Okay, and then we get to creditors. We already have a creditors account with a credit balance brought down on the credit side of 3345. That balance is on the credit side. Now we will have an entry on the debit side of 1120, and the contra account will be bank. So on the debit side of creditors, your creditors account, you will have bank 1120. All right, and that is it. That is then the posting from the cash payments journal. Okay, now let's start with the adjustments. Okay, the first one is membership information regarding the membership fees. I'm not going to do that now. I will be dealing with that membership fees. I will go through that whole account, the membership fees account. I will go through that account with all the entries in it. I will go through it after we've done the adjustments. Okay, so let's go to number 2. Depreciation is calculated on equipment at 15% on the cost price. Okay, so what is the cost price for equipment? We look in the trial balance. It is 45,293. 45,293. If we multiply that by 15%, we get 6,794. So the double entry for that is debit depreciation, credit accumulated depreciation on equipment. Okay. And then we get to stock on hand in the canteen is 2680. The double entry for that adjustment is debit trading stock. You can write canteen in brackets. Debit trading stock canteen 2680 and credit closing stock 2680. Number 4, the interest on the Botha bursary fund investment has to be adjusted. The interest has to be used for current expenses. Okay, so it's the interest on the Botha fund. Okay, what should it be for the year? If we look at the investment for the Botha bursary fund, it is 13,000. Okay, so it's 13,000 times 22%. Gives you an amount of 2860. That was the interest that we were supposed to receive for the whole year. Now let's just check. Have we received any interest yet? Yes, we have already received 2145. So if you open that account, your interest account for Botha fund, you will have on the credit side 2145. And then you will also have another entry for the adjustment on the credit side, and that is income accrued 715, because that is the difference between the 2860 of what the interest should be and what we've already received. That gives you income accrued of 715. And the double entry for that is debit income accrued and you credit interest Botha fund. Okay, and then we get to that number 5, adjust the interest on the loan account. the loan was granted on the 1st of January, but 20,000 was repaid on the 30th of June. Okay, let's see what is that loan at the moment. Let's see, loan, let me get to that loan account. Loan show bank 10,000. Okay, but so it was 10,000 from the beginning of July. Okay, for that last 6 months of the year, it was 10,000. But before that, it was 30,000 for 6 months. Okay, because you only paid it back. What was it? The 31st of, what does the adjustment say? It say the 20,000 was repaid on the 30th of June. In other words, for the first 6 months of the year, the loan was 30,000. So we're going to calculate 30,000 times 20% for 6 months, and that gives us 3,000 Rand. Okay, and then for the next 6 months, the balance was only 10,000 Rand. So we are going to multiply 10,000 by 22%, and then we get 1,000 Rand for the last 6 months. So in total, we had to pay, or we are supposed to pay interest of, in total, 4,000 for that, on that loan. Okay, let's see what have we paid. Oh, good. Okay, we've paid 6,000 already. So what does it mean? It means that we have paid 2,000 for the next year. All right. So that is expenses prepaid. Okay. And that is 2,000. That's the difference between what we have paid already and what we're supposed to pay. So it is 2,000 Rand. The double entry for that is debit expenses prepaid and credit interest on loan 2,000. Okay. Then it says insurance paid in advance. That is expenses prepaid. So we're going to open the insurance account. There is a total on the debit side of 6,363. And we're going to credit insurance with that amount that's prepaid for the next year. So that we're going to credit insurance with 490. And we debit expenses prepaid with 490. Honorarium owed to the secretary, that is expenses accrued. So let's see, the honorarium, is there a total in that account? Yes, there is a total of 500. So we will add that. So we will debit the honorarium account with 400 and credit expenses accrued with 400. Okay, I'm going to give you 5 minutes now just to compare your general ledger with this one that I'm going to show you here. And then after that 5 minutes, I will explain to you the membership fees. I will go through the membership fees in detail, the trading stock account, and also the trading account for the canteen. Okay, let's do the membership fees account. All right. Okay, on the credit side, we open with the total that was given in the pre-adjustment or in the trial balance, 24,500. Okay, and then there was a posting from the cash book where we credited membership fees. Where we credited membership fees and debited bank. That was 700. That was with the posting. From the cash book, and then we get to the adjustments where they say membership fees amounted to $350 per year, and there were 75 dances. Okay, immediately when you see that, you know that is the amount that must be transferred to our income and expenditure account. So it is 75 times 35 gives you 26,250. And that is the amount you write on the debit side of membership fees, income and expenditure. Okay. Now what is left, what was accrued at the end of the year and what was prepaid for the next year. All right, let's see what they say. At the end of 21, 12 dancers had already paid their membership fees for 22. So 12 paid in advance. Okay. Membership fees paid in advance. There's income received in advance. That is that 12,000 times 350 gives you that 4,200. So on the debit side of membership fees, we always write at the end of the year, the adjustment for membership fees when there's income received in advance is always entered on the debit side of the membership fees account. So it's income received in advance, 4,200. Okay. Do they give us the amount that was accrued at the end of the year? Okay, at the beginning, 11 persons had not yet paid their membership fees. Of these, 5 had paid their membership fees, and the rest must be written off as irrecoverable. So it's that 11 less 5 that paid, so we must write 6 off as irrecoverable, as membership fees written off. We credit membership fees, and we're going to open an account for membership fees written off or fees written off, and that is 2,100. So that is where you get that 2,100 on the credit side. Okay. Income accrued, no, they don't give you that amount, but you have all the other amounts. So that is the balancing figure. You can calculate that. If you add the debit side and you add the credit side and you deduct the smaller side from the bigger one, you'll see that the smaller one was on the credit side, and that is so that you can enter that income accrued 3,150. All right, that was the balancing figure. That was the amount that you had to calculate in this case. I just say it once more. They will always give you like one amount. They won't give you one amount, or they will not give you one amount many times, and then it means that you have to calculate that, and that will be the balancing figure of balancing amount in that membership fees account. So it's either the money that was received in the bank, they won't give you that amount, or they won't give you the amount that we must transfer to the income and expenditure account, or they won't give you the income received in advance, then you must calculate that, or they won't give you the income accrued amount, in other words, the membership fees that was outstanding at the end of the year. And then if the amount that they don't give you, it's easy. That is just the balancing figure in that account, and you can easily calculate that. Okay. Okay, now let's get to the trading stock account for the canteen. Remember, I said to you, if you don't have an opening stock account under the nominal account section, but you have a stock account in the balance sheet section, then it means you first have to do that adjustment. Even if they don't say it or they don't give you that information, you know that you've got to first close off that the opening stock. You've got to open an opening stock account, and you've got to do that adjustment. It was actually the reverse entry for the end of the previous year, but if they haven't done it in this case, so that is the first thing that you do. Okay, when you see there's no opening stock in your nominal account section, you know you're going to open it yourself. Okay, so the first of all, what the double entry for that is, the trading stock has got a debit balance of let's get the debit balance, trading stock opening, 4203 on the debit side. That is where you get that from the trial balance, 4203. Okay, then you're going to credit that account and debit your opening stock account. In other words, you take out your opening stock from your trading stock account. Okay, so you credit trading stock with 4203 and you debit a nominal account and you call that opening stock. Okay, 4203. And then the adjustment for the closing stock, that one is, what was that? It was adjustment number 3, stock on hand. You know what the double entry is. You credit closing stock and you debit trading stock. So that is where that closing stock 2680 comes from there on the debit side. Closing stock 2680. All right. So then you've got your entries on the debit side and on the credit side, and then you can just balance that, and the balance will be your closing stock 2680. That is the balance in that account. Okay, and that balance, the closing stock in that trading stock account will now be the opening stock for the next financial year. All right, so you can either, some people will do that entry immediately at the beginning of the new year. They will credit trading stock and debit opening stock, or sometimes they leave it in that trading stock account as it is right now. And that is the example. And in this exercise, what they've done is they left that amount in that account and just did for the adjustment or that entry for the opening stock to be done at the end of the year. Okay. Okay, let's do the trading account for the canteen. Okay. We're going to close off opening stock to this trading account. So we will credit opening stock and debit trading account. That is to close off opening stock to the trading account. Okay, 4203 on the debit side of the trading stock account and on the credit side of the opening stock account. All right. On the credit side of the trading account, we will close off the closing stock account. In other words, we're going to debit closing stock and credit trading account with 2680. Okay. And then the purchases. If you look at your purchases account that you have opened, you'll see there was an opening, there was a total that you got from your pre-adjustment or from your prior balance. There was also an amount that you posted from your cash book for purchases. The same was with the sales. It was the amount from the trial balance, and then there was an amount from the cash book that you posted to that account. So the purchases account, the total that you enter on the debit side of your trading account that you close off to your trading account is 17,488. So credit purchases, debit trading account. All right. And then with sales, the total for sales was 31,413. So what's the double entry? Debit sales to close it off to the trading account, and then credit trading account with sales 31,413. Okay, and then the difference between the two sides, the credit side will be bigger. With the credit side, the total is 34,093. If you deduct the opening stock and purchases, you get the difference that you're going to transfer as a surplus to your income and expenditure account, and that amount is 12,402. Okay, let's go through the statement of an expenditure quickly. We start with current income. The surplus from the canteen, we have just calculated that in the trading account for the canteen. Membership fees 26,250. We get that from the membership fees account. Then donation was 3,000. That was also an entry during this month. And we get that from the donation account, and the same with the entrance fees. That was the amount that was posted from the cash book. Okay, then we get the total current income, which is 42,552. Okay, and then we get to the expenses. Membership fees written off 2,100. Depreciation that we've calculated 6,794. Honorarium, there was also an adjustment regarding the honorarium, so that total is now 900. Water and electricity, 1601. I think we get that straight from, no, there was also an adjustment for water and electricity. So the total there is 1601. And then affiliation fees 720. Bank charges, affiliation fees we get straight from the trial balance. Affiliation fees 720. Bank charges straight from the trial balance 463. Annual dance party 625. Straight from the trial balance. Insurance, there was an adjustment for insurance. The total is now 5873. Fuel 187, there was also an adjustment for that. Stationery 350. Let me see, stationery. Yes, there was an adjustment for stationery as well. And the wages was, oh, not an adjustment, sorry. I think you got that amount from the cash book. You bought stationery for 350 because there's no stationery in the pre-adjustment or in this trial balance. So I think you got that from, let me just make sure you got that from your cash book. Okay. And then the wages 2,500 is also from your cash book. And then you get a surplus from general activities. Then you add those expenses, you get 22,113. And you write that in that brackets because that is, you're going to deduct that from your total current income from that 42,552. And then you get the surplus from general activities of 20,439. And you add your interest income. There was also an adjustment regarding that. The interest, it's 2,860. And then if you add those two, if you add the interest with the surplus, you get 23,299. And then the interest expense, there was also an adjustment regarding that interest expense. So the amount that you transfer to the income and expenditure account is 4,000. Okay. So if you deduct that interest expense from your surplus before interest expense, you get a net surplus for the year of 19,299. Okay, so let's quickly go through the notes. The first one, interest on investment with a bursary fund. That is just that interest, and there was also an adjustment regarding that, but you get that amount from that interest account. The second one is interest on loan. There was also an adjustment on that one, but that is the amount that you get from that interest on loan account. Then we get to the tangible fixed assets. At the beginning of the year, the cost was 45,293. You get that from your trial balance. And you also get the accumulated depreciation at the beginning of the year, and that was 8,234. Okay, if you deduct that accumulated depreciation from the cost, you get the carrying value at the beginning of the year of 37,059. Okay, and then the depreciation for the year that you wrote off was 6,794. We've already done that. So if you deduct that, first of all, you add the accumulated depreciation at the beginning of the year plus the new depreciation that was written off. Then you get the total accumulated, then you get the accumulated depreciation at the end of the year. You will also find that amount in your accumulated depreciation account that you were supposed to open. All right. So that balance in that account is then at the end of the year 15,028. All right. And the cost is still 45,293. So if you deduct the accumulated depreciation from the cost, you get the carrying value at the end of the year of 30,265, and that is the amount that you will enter in your balance sheet. Okay, we get to inventories, the stock, that was the closing stock at the end of the year, 2,680. Trade and other receivables, income receivable or income accrued, that 3,150. You get that from membership fees. Remember, that was the amount that we had to calculate. It was the balancing amount in that account. It was for membership fees, that 3,150. The 715 was for the interest on that quota investment. Okay, that two amounts gives you 3,865. And then expenses prepaid, The 2,000 is for that interest on loan, and the other 490 was for insurance that was prepaid for the next year. And that gives you that 6,355. Cash and cash equivalents bank, that was the balance in the cash book at the end of the year, 66578, and the petty cash, if you look at the petty cash account, that was the balance in the petty cash account, 300. Okay, and then we get to the accumulated fund account. The balance at the beginning of the year was that 10,054, and then you'll see there is a 60,000 that was supposed to be entered in that account. I just want to tell you, under the check counter force number 8, where they said you must invest that 40,000, they say conditions of the estate stipulated that 40,000 had to be invested, and then the balance of the money had to be capitalized. All right. The moment that you hear capitalize, you see or hear the account accumulated fund. All right. So what you're actually supposed to do then is to credit accumulated fund account and to credit accumulated fund and debit the fund Davy account. All right. So that is where that 60,000 comes from. And then that surplus was the amount that you've just calculated in the income and expenditure account. And that is the balance at the end of the year. For your accumulated fund is 89,353. Okay, and then you get the two funds, the Botha bursary fund of 13,000. That was the balance at the beginning of the year. And then also the fund, the Davy fund, that amount was received during the year, and you opened that account, D Davy. The first entry in that account was that 100,000 from the bank. So you debited bank and credited that 100,000 in the Davy fund account. But because of that 60,000 that you capitalized, you sort of took it out of that fund and transferred it to the accumulated fund account. So the balance in that fund Davy account is now 40,000, and that is the same as the investment for the Davy fund. Remember, I said to you a few lessons back that you must always check that your fund, the balance in your fund and the balance in your investment, that those two balances must be the same. All right. Okay, then we get to trade and other payables. Creditors control 2225. There was a payment or a posting from your cash book to that account. So if you look at the creditors account, that was the balance in that account, 225. Expenses accrued, that was for that honorarium of 400 Rand. So that is, if you open that expenses accrued account, you would know that that was the total in that account. In that income received in advance was, let me just see, income received in advance, 4,200. Was that for members that have paid their membership fees in advance for the next year? Yes, let me just see. At the end of 21, 12 dancers had already paid their membership fees. Okay, so that is where that amount of 4,200 comes from. Okay, so if you add those, you get trade and other payables of 6,825. Okay, I just want to say one thing once more, and that is I can't tell you enough how important it is to open yourself T accounts in rough, just small little T accounts with a pencil or a pen whenever you need to do adjustments so that you remember. Otherwise, if you don't open yourself those two T accounts, then when you get to the balance sheet or when you get to the notes, you forget about some of those accounts like expenses prepaid or whatever, and maybe you forget to enter a transaction in that. So please, for your own benefit, if you get a question where they don't ask you to open all the ledger accounts, or in the exam, they probably won't ask you to open any of the ledger accounts, remember, accounts that's been affected by adjustments, open those accounts for yourself. Open them that you can remember to enter them into the balance sheet, or enter them in the balance sheet or in the income and expenditure account, and at least do all the entries that is necessary. Do all those entries in those T accounts. All right. In this exercise, they haven't even asked you to open all the accounts. They ask you to post from the cash book to the ledger. So you did not even have to open all the accounts. So there were just some of the accounts. So in this case, you also have to open the T accounts that's been affected by the adjustments, so that you remember about those accounts. Okay. All right, let's carry on to the balance sheet. I'm not going to go through each and every, because we've already done that in the notes. I'm quickly going to go through the balance sheet. Okay. Always assets is divided into non-current and current assets, and then non-current assets are divided into fixed assets and financial assets. Okay, so let's start with that. Non-current assets, our fixed assets, 3265. We get that from the note. We have just calculated that. And then our financial assets, the two investments, the Botha Bursary Fund and the Davy investment. The one is 13,000 and the other one 40,000. If we add that, we get our financial assets, 53,000. It's those two added up. And then if we add the financial assets to the tangible or fixed assets, we get 83,265 for our non-current assets. Okay, then we get to the current assets, inventories. We've also done that in the notes. 2680, trade and other receivables, 6355, cash and cash equivalents, 66878. Okay, if we add those three entries under the current assets, we get 75913. That is the total of our current assets. If we add that current assets to the non-current assets, we get the total assets of 159178. Okay, then we get to the equity and liabilities. Members' equity, accumulated fund is 89353. The funds, the total is 53000. If you add those two amounts, you get the members' equity of 142353. Okay, then we get to the non-current liabilities. It's the loan in the bank, show bank, 10,000 Rand. And then that's the only item under non-current liabilities. And then we get current liabilities. The only entry there is trade and other payables, which is 6825. Okay, so now we add the current liabilities, non-current liabilities, and members' equity, and then we get the same as the assets, the same total of 159178. And you're very happy because you know your balance sheet balances and your work is probably done correctly. All right, this was quite a long lesson. I'm trying to get it shorter, but it seems, I don't know, it seems that I can't manage to get it shorter, but okay, I'll try. Let's try in the next exercise or then in the next lesson. So I'll see you then in lesson 70. Hopefully I will mark exercise 4L and 4M in that exercise, in that lesson, and then that lesson will be the last for the non-profit organizations. All right, till next time, see you. Goodbye.